Hello and welcome back. I'm Steve Murphy, a trust and estates attorney with McGuire Woods LLP, and this is Legacy Planning Once Removed, my podcast on legacy, estate planning, taxes, property, and everything else on my clients' minds. This is a brief episode on generation skipping planning or dynastic planning. This is ways to benefit future generations in a tax efficient way. And most importantly, this episode has a few specific steps to take now, so stay tuned to the end. This topic is timely. We're getting a lot of questions about this kind of planning. I guess we always get a lot of questions about this kind of planning, but we're especially getting questions about this kind of planning because of the scheduled sunset of current tax law at the end of 2025. I'll mention that in a few minutes. And that's also the topic of my recent episode 30. And I also wanted to put this episode out now because I actually just wrote an article about this kind of dynastic planning. So I've spoken about this kind of planning before. I talked about this in episode 4. That's a nice episode on the generation skipping transfer tax or GST tax. And I spoke about this in episode 25. That answers this question I get all the time about what is a dynasty trust or what is a perpetuities trust? And in that episode, I summarized that, at least in my view, there isn't really a pure dynasty trust. Instead, there's a trust that has dynastic elements or that has the potential to benefit future generations in specific ways. Well, in any event, all this has to do with a tax called the generation skipping transfer tax or GST tax. As a reminder, this is a tax on transfers that are made to 2 or more generations below the donor. So the idea is that the estate tax should be imposed on every generation. So if you, we'll call you generation 1, leave assets directly from you, generation 1, to your child, we'll call that generation 2, then those assets will be included in generation 2's estate for estate tax purposes. But if you leave the assets all the way to your grandchild, we'll call that maybe generation 3, then those assets don't trigger estate tax at the death of your child, at the death of generation 2. This was perceived as a potential abuse of the estate tax regime, so Congress enacted a separate tax called the GST tax. So under the GST tax, if you make a gift to generation 3 or future generations, then that's called a generation skip, and it might trigger GST tax. Just a few more comments about GST tax. If you set up a trust that is not exempt from GST tax, then when generation 3 starts to benefit from that trust, that might also trigger GST tax. And maybe more importantly, there is an exemption from GST tax, and you can use this exemption to make gifts to grandchildren or more remote descendants without triggering GST tax at all. And maybe even more importantly than that, you can apply this exemption to a trust so that when the trust is set up or as the trust makes distributions to further generations, then there's no GST tax due. And currently that exemption is really high. That exemption is $10 million per person indexed for inflation. So the GST tax exemption as of right now in 2024 is $13.61 million per person. That's the amount that you can leave to generation 3 and lower, or which you can put into a trust that would never trigger estate tax or GST tax. And that kind of trust can result in significant estate tax savings over time. Again, I talk about that in more detail in those other episodes. That GST tax exemption is also scheduled to be cut in half at the end of 2025. So this generation planning is a particular kind of strategy to consider taking before the end of 2025 if you're concerned about the exemption being cut in half. And by the way, this is just a reminder of the importance of using that exemption while you have it. I talked about that in this recent episode, episode 30. I call that Countdown to Sunset 2025, Planning in the Face of Scheduled Changes in the Law. I think that's a great title. So the GST exempt or non-exempt status of an irrevocable trust is really critical. If it's exempt from GST tax, then the trust can avoid estate tax in the future. if it's not exempt from GST tax, then you might be headed towards a situation where significant GST tax is due. But maybe more importantly, that status of the GST exempt or non-exempt status might only apply years and years from now, maybe at your death, or maybe at the death of generation 2 or generation 3. And just think about the circumstances in those future years. You might not have great records of the trust or transfers to the trust. And that starts to get to some of the specific steps I'll mention later in this episode. So I mentioned I wrote an article about the GST tax. That was a lot of fun to work on. It's in an academic journal called the ACTEC Law Journal, and it was just published in September. I've gotten a lot of great comments from folks about the article. I appreciate that. The full title is in the show notes for anyone who is so bold as to go read that article. ACTEC is a great organization. I'm really privileged to be a member. We call our members fellows. ACTEC is the American College of Trust and Estate Counsel, which I think of as the real premier professional organization for lawyers in our field. And our firm has clients all over the country. This podcast has listeners all over the country. And you can check out actec.org. That's actec.org for other resources. They have their own podcast. I'm occasionally a guest. And to contact ACTEC fellows. And ACTEC has a great staff that worked on the article, and the students and faculty at Hofstra Law School did a really great job editing it. And I really appreciate all their work to put that article out. So the article is just my view of some ways that I think about the GST tax, of how it's evolved over time, to maybe be a little inconsistent with its initial goals. And I have some ideas of maybe some ways to fix it, to at least provide some more clarity and certainty for individuals. That is, I'm hoping to try to make the GST tax make more sense based on its stated goals. But that's the article. But this episode is just about a few specific steps to think about now while we're on the topic of dynastic planning and the potential sunset and GST tax. And I would encourage clients to take those steps. So here's a few. First, if you have set up any kind of irrevocable trust, I'd say be sure to gather in your own records the documentation about gifts to that trust, and importantly, how GST tax exemption has been allocated to those transfers. Put those documents in your own files, what I've called earlier your death dossier, those great records that you're going to leave for those who are your successors, so they can understand some of these steps you've taken. Now, where is that information about GST tax exemption? For gifts during life, that's usually in a form filed with the IRS called a gift tax return, or Form 709. And when I bring this up with clients, many clients comment to me. They say, oh, that form is in my prior attorney's files, or it's in my accountant's files, or it's in the IRS's files, it's somewhere. But then I have to ask them, well, where will those firms and those files be maybe decades from now when this question is really important? So this is a great opportunity to review those returns, make sure all the right elections have been made, and you have a clear picture of the GST tax status of those trusts. And again, maybe even put those records into your own record so you have control of them when they're really needed. And if you find that you do have GST tax exemption left, then this is also a time to explore additional gifts to those trusts, as long as you make the right elections on these returns. So second, if someone has set up an irrevocable trust for your benefit, then I think you should actually ask the same questions. Try to track down those same gift tax returns for gifts to that trust. That would be in those gift tax returns, Form 709. And you should also track down any records for filings made at the transferor's death. If the transferor isn't living, that would be a separate form called Form 706, the estate tax return. Those forms might be hard to track down now, but it's only going to get harder, only going to get more difficult to track those down, again, maybe decades from now. And while you're at it, while you're thinking about this irrevocable trust someone else might have set up for your benefit, you might think about some other steps to take. Based on what you find out about the GST tax status, you could consider making a distribution from that trust to a beneficiary to give that beneficiary funds that the beneficiary can use maybe before the end of 2025, so the beneficiary can use his or her own exemption before it goes down. The beneficiary could set up a long-term trust that is exempt from GST tax. Or you could transfer those assets out of that trust and include those assets in the beneficiary's estate, so the assets receive a step up in basis for income tax purposes on the beneficiary's death and result in a lot of income tax savings. And by the way, if you do want to do some of this additional planning with an existing irrevocable trust, be mindful of a couple of pitfalls, especially the step transaction doctrine. That I talk about that in episode 19. And by the way, for trusts that were set up before the GST tax was in effect, that's usually trusts or transfers made before 1985 or 1986, very specific rules apply. So keep those in mind. And then maybe third, if you're a trustee of this kind of irrevocable trust, then again, this is a great opportunity to look back in your files and make sure your records are complete. If they're not complete, this is an excuse or an opportunity to try to go get those records. And again, I feel like it's just going to get harder to get those records in the future. So I think the big takeaway is that dynastic planning or GST tax planning can be a really important tool as part of that legacy plan. And if you're interested in that kind of planning, or if you or your family have already started taking steps related to that kind of planning, I think this is a great opportunity to gather all that all-important information for those trusts so you can plan accordingly. Well, thanks again. I'm Steve Murphy, and this has been Legacy Planning Once Removed, my podcast on thoughtful estate planning. Thanks for listening.